I'm going to start just by touching on some of the main factors in that big picture that we see as particularly relevant to shaping our circumstances here. On the one hand, we've got a number of things that you might regard as stimulating. Asian demand ongoing, driving resources investment, which is particularly relevant to the hunter. That is associated with the strong Australian dollar in terms of trade that we've been experiencing, which have had a negative impact on some sectors of the economy. That's moderated to some extent. We've also understand at national level that there's been some easing in the household savings ratio, which had climbed back to 1980s level as part of the deleveraging following the global financial crisis. And with that easing has gone some increase in household consumption, household spending, which helps to drive the economy. And we've had lower interest rates. On the other hand, Asian demand is slowing a little faster than had been anticipated, and our whole national economy has slowed somewhat. The Australian dollar and the terms of trade have come off their peak, but they are likely to remain high, we understand, putting pressure, continued pressure on the export exposed and import competing sectors, which are also important in the hunter. And even though there's been some easing of that household savings ratio, our level of household debt remains very high, which impacts on discretionary spending and people's decisions about what they do. We also now have gently rising unemployment and the continued uncertainty about what's happening in Europe and in the US, all of which impacts business and consumer confidence. This is the hunter region update, of course, and what I'm going to do this morning briefly is have a look at some recent history to see how we are tracking in the hunter. We don't have a measure of regional domestic product to look at, and we therefore look at employment data, which is a fairly good proxy for what's happening with the overall economy. We'll have a look at the drivers of economic growth and what's happening there, in particular business investment and business sentiment, household consumption, and housing investment, which has been an important historical driver, and we'll wrap up with how we see the regional outlook. So turning first to the labour market, you can see here on the 10-year trend, we've had very strong growth in employment. Those figures have been updated as of yesterday with the new labour market data for June, which is continuing the same story of a slow downward, softer trend over the last 9 months or so. This is ABS labour force data, so it moves around quite a lot, the actuals, and we're looking there in the solid red line at the trend line. So this, we will get a more accurate sense of some of this from the census when it's released in late October. What you're seeing there is the net effect of gains in some areas, particularly the resources related areas, and losses in other areas. And that overall totality masks a little bit of what's happening in the underlying dynamics of the market. So for example, we've got quite a strong increase in the casualisation of the labour force, and you can see here that as in the GFC in late 08, early 09, it's the casual labour force, which is very much female dominated, that is providing a lot of flexibility in the market, while full-time male employment is trucking along fairly steadily. This is percentage change on a year earlier. What's happening to available jobs also influences participation rates, and that partly explains why male participation in the hunter has held up quite well, while female participation has been slowly declining. That impacts the underlying unemployment rate, and you can see that of recent time we have had something of an upturn. It's still well below the sort of historical high level that the hunter experienced, and it's tracking around where the whole of New South Wales is. The overall level also masks what's happening in terms of structural adjustment between industries. This chart is showing smoothed data. It's the average change in unemployment averaged right across the 12 months to May 2012 compared with May 2011. And there's some, it moves around a lot. There's a couple of slightly anomalous things. That looks like there's been a bit of a pickup in employment in both retail, trade and construction. That's from low bases. That may be reflecting a bit of the pickup we've heard of in retail activity. And of course there's a lot of construction activity going on in the Hunter around infrastructure. But the thing of particular note is the bottom end of the chart and manufacturing industry, which has been bucking the trend nationally of long-term downward employment in manufacturing. We're seeing a bit of a turnaround for the first time in the Hunter in the last 6 months or so. And we've heard recent stories of Hunter-based manufacturing, such as Gunninan and EDI Downer sending some of their jobs offshore. Those that hasn't flowed through into the data yet, of course, but it's that sort of thing that appears to be happening here. So where are we going? Well, the leading indicator that we have for employment is advertisements. And again, there's this sense that things are coming off what has been quite a peak. The Hunter has been performing better than the rest of the nation for about the last 5 years. But at the moment, this indicator, which leads employment by 1 or 2 quarters, is suggesting that there's going to be some further softening in the job market. The other piece of information we now have about where the working age population is, this is our first look at the census. That detailed map is in the publication, and you may need some time to look at it more closely. But what that's showing is the darker the area, the higher the density of people of working age, 15 to 64, in those small areas. This is what census is now defining as small areas, the little SA1s. And what we're seeing is a greater proportion of the population of working age in those urban growth areas to the northwest of Newcastle and up into the Hunter, the upper Hunter. We suspect attracted by both job opportunities and in terms of the lower Hunter greenfield housing. And we're also seeing between the censuses some evidence of in-migration of people in that working age. Again, we'll have more detail once we get the labour force second release data of census. Of interest to me and anybody who's interested in growing industries, the older population, our ageing population, which is growing faster than any other segment of the population, is roughly the mirror reverse of where our more heavily workforce areas are. Again, the darker the area, the higher the proportion of the population who are over 65. So these are going to be the areas that are most in need of services for aged care and healthy ageing, both of which are going to be real growth industries over the next 20 or so years. Looking at business conditions, again, a real driver of what's happening in the area. Back to what I said at the beginning, in the Hunter, a major driving force is the momentum of resources and related infrastructure investment. That chart, I'm not going to go to the detail, it's in the publication. The point about it is that is the latest survey from the Bureau of Resources and Energy Economics, which is now called BRE, the old ABARES. That is work that is currently under construction or committed to happen in the next 18 months. That's more than $5 billion worth, most of it flowing into the area, much of it in the Lower Hunter for port and rail infrastructure. And that's driving that growth in coal exports through the port, which is expected to continue for some time. There's another amount of at least that much again that BRE has identified that's coming down the pike over the next 10 years. The point about this is the momentum. What that is doing is continuing that pressure on the the other sectors in the economy. There's a great deal of competition for skilled trades in particular. Some of these contracts have been somewhat delayed for that reason. And that issue is also masking one that we need to be thinking about for the longer term future, that of the need to increase productivity, both currently and post the resources boom, which is going to require investment not just in resources and related infrastructure, but in other economic and social infrastructure, including human capital, education, training and so on. We don't have good data for the region on capital expenditure as a driver of business, so we look at proxies. We're seeing some weaker levels of investment in the non-resource sector. This is registrations of new commercial vehicles, which have fallen away quite markedly in the last few quarters. Not as much as they have in the state as a whole, but nevertheless they're well below what had been the 10-year trend. And there may have been some pull forward from government stimulus in the late stages of the post-GFC recovery, but nevertheless that's consistent with weaker business sentiment. If we look at the construction industry, this is non-infrastructure construction, so non-dwelling construction, commercial and office premises. Again, private investment it's plugging along there, but it really hasn't been able to fill the void left by the government input during the post-GFC stimulus. And anecdotal reports are that tight credit and indeed competition for labour are possibly constraining some of these investments. What's more, the early monthly data for the June quarter suggests that the June quarter is going to continue that sort of weakness for the time being. So not surprisingly, business performance overall is reflecting these somewhat softer conditions. This is from our quarterly business survey of 300 businesses across the Hunter region. It's a random selection, so you won't be surprised to hear that about 2/3 of those are small, medium enterprises that employ 10 or fewer employees, and about 1/3 of them are in retail. You can see the downward trend in forward orders taken, actually slipping below the level of steady, and business performance as a combined index of trading performance, profitability and employment has also slipped somewhat. And that of course drives business confidence. This is the 12-month outlook that businesses tell us they see for their own enterprises. You can see that downward trend ever since the post-GFC fillip, but it's still positive, and importantly you can see some resilience in that intentions to really maintain capital expenditure, increase capital expenditure a little over the next 12 months. That's how business sees their own enterprises. In terms of the Hunter region, it's a less optimistic picture. We don't know the extent to which business confidence is impacted by the many stories that we see in the media about the not so good things, and that's the first time that the expectations for the next 3 months have slipped below the horizontal since the GFC. That of course does impact business decisions, as does what's happening in the household consumption sector. We've heard that from the RBA that at national level household consumption has started to rise, and we're certainly seeing that here in the Hunter. Again, one of our proxies is new passenger vehicle registrations, which has picked up quite markedly in the last few quarters, sort of more than swamping what's happening on the commercial side, and again well above trend. We're speculating that maybe some of this is delayed purchases. People were saving their pennies during the deleveraging period following the GFC. Perhaps some of these decisions are now being made, and of course new vehicles are also one of the sectors that benefit from the terms of trade being largely imported. The evidence is also supported by our household surveys. These are quarterly surveys of 300 households across the Hunter. The blue line is what they tell us has been happening to their purchasing in the last 3 months. And you can see there's quite a solid upturn there over the last couple of quarters. The red line is what they're telling us they think they're going to be doing in the next 3 months. And there you're seeing a greater degree of caution. And that's perhaps not surprising given what's happening to household wealth and, of course, uncertainty about what's happening in the job market. Like businesses, residents are less optimistic about the Hunter region economy's outlook than they are about their own situation. Their view of their personal financial circumstances, which I'm not showing here, but it's weakened somewhat, remains generally positive, but you can see that expectations for the economy have weakened further. A lot of doom and gloom reported in the media, and that may well be impacting on that as well as people's own personal circumstances and uncertainties about employment. Housing investment, as I mentioned, has traditionally been a major growth driver in the Hunter, not so much of recent times. The real estate market has remained quite flat over the last couple of years, and what that means in real terms is that people, with about 70% of people owning their own home, real household wealth has actually been declining. At the same time, rental prices in the Hunter have been increasing rapidly in response to demand for housing. Apparently not enough, even though the yields are increasing, not enough to attract investors back into the market terribly much. But what that is doing, and again we're having a first look at census data, is increasing the level of rental stress amongst renting households. Again, the darker the area, the greater the level of rental stress. This is at LGA level. You can see that in Great Lakes, which is now by the ABS no longer defined as part of the Hunter, it's up around the 50% of renting households. Even in Lake Macquarie, Cessnock and Port Stephens, we've got relatively high levels of rental stress. It's lower in the Upper Hunter, which may surprise some people given the very tight housing market up there, but that really reflects considerably higher disposable incomes up there, and the people who are really doing it tough are those who are outside the resources sector. Is the housing construction industry responding? Well, not very much at this stage. Housing approvals are generally a good indicator of the outlook for activity. They remain fairly weak. The Hunter has not participated to the same extent as the rest of New South Wales in the recent lift in approvals, which you'll have heard about, and that's probably a structural thing. We don't have nearly as much unit construction, and when we look at the detail of the data, what's happening in New South Wales as a whole, dominated by Sydney, is a very strong upsurge in unit approvals, and that's not something that's not a dynamic that happens in the Hunter. We also ask our household survey respondents whether they are planning to buy a new house in the next 3 months, and that also is trending downwards. It's a very volatile indicator. It's very much subject to sampling error, but what that last figure is telling us is that it's not on the upswing. So, but given that, this is new dwellings, people do still think it's not a bad time to buy. It's a buyer's market, flat prices and lowered interest rates. That brings me to a wrap-up. I started at the beginning by saying on the one hand there are some good things, on the other hand there's some not so good, and indeed it really depends a lot in the Hunter what sector of the economy you're operating in. So in terms of how we see the outlook, it's a bit the same on the one hand, on the other hand. We certainly see continuing momentum driving the Hunter economy from resource-related investment. What that also means is ongoing competition, particularly in the skilled trades, and we've seen a bit of an increasing duration of unemployment in the Hunter. That's probably some stickiness around people who are coming out of work, not necessarily having the trades that are required or the skills that are required in the jobs that are available. And of course, it's also going to continue that pressure on the export exposed and import competing sectors. We do have slower national growth. That does affect the hunter. Asian demand is a little slower. That may have a little bit of an effect in the hunter, but it certainly affects business conditions and consumer confidence, and they are likely to remain muted for the time being. Monetary levers and fiscal levers are still available. I'll let David talk to the extent he's willing to about the monetary levers. And the fiscal levers, of course, are government policy if there is a real downturn. Longer term, again, we really will need fiscal policy to support productivity growth in this area and in the country as a whole. And that means investment in economic and social infrastructure. Thank you.